Hi guys, my name is Mo. I'm a UK-based qualified financial advisor. However, before we get into this video, I just want to make it clear this video is for educational purposes only and not financial advice. Okay. Today I'm going to run through uh, some call options that I've bought personally, but to give you the education and explanation behind what are call options, okay, which stock I've purchased them in, and just run through the basic of options, because I feel like, especially in the UK, we're lacking the knowledge of options, okay, and the platforms where they are available as well. There are limited options where we can buy things such as calls and puts. Okay, the stock where I bought them is to Adobe, ticker symbol ADBE. Okay, the reason it caught my attention and I purchased them, okay, is mainly because of technicals, earnings, and overall behavior behind the scenes. Okay, I'm going to run through that with yourself, and I'll give you further information on what exactly are calls, puts, strike prices, what it actually means. I'm going to try to give you that information. Okay, I hope this is going to be an educational video, especially for my UK audience out there. Hopefully, it's going to improve your journey into investing. I know with everything going on, we have to start investing early, as soon as possible, ideally. Okay, as Warren Buffett says, the best time to invest was yesterday. However, the next best time is today. Okay, so we have to invest in ourselves, into our education. We have to educate ourselves to ensure we're getting out there, we're beating the system, and we're getting them gains. All right, let's go, guys. Okay, guys, so starting off with the basics. A call option is where you're expecting the price of a certain stock to go up, and the strike price is what you believe you're expecting it to go above, and also it comes with a date normally, and that would be the expiry date. If the stock hasn't reached above the price of where you've gone with the strike price at the time of the expiry, that option is worthless, because you have the option to buy the stock, and if the price is below your strike price, you're not going to buy it, okay, or vice versa, because there are two types of options. One is a put, and secondly is a call option. Call option is when you're expecting a stock to go up, and if you're expecting a stock to fall down, and then you're looking at a put option. Okay, I'll go through different scenarios where you might buy a put option or where you might buy a call option. Recently, what I'm going to go through is I bought call options for Adobe stock. Okay, and I'll run through why Adobe exactly. Okay, we've got the chart up here, but just want to, before I go into the chart, I want to just explain the background, the reasoning behind it, because I don't go just off the charts. Charts are brilliant, to look at for short-term trends, but there's different factors as well. For instance, Adobe is one of my personal holdings in my stock portfolio, okay, and it's one of my biggest. I believe they are undervalued right now, okay. There was a lot of AI concern, AI overtaking Adobe, and with the recent earnings, they've showed a triple beat, and they've very clearly demonstrated they're not going anywhere. The profits are up, they're doing well, the sales are up. So hence, obviously, we're expecting the stock to go upwards. So that is the reasoning behind why I bought the call option. Okay, so you have to do your own research each time. But yeah, for instance, the stock is 356 at the moment. Okay, so the other thing as well, on Friday, the stock market sort of tanked based off Broadcom's earnings. They were ports or AI concerns, bubble concerns again. However, Adobe actually held up, so it was still up 1.7%, although the whole market, the broader market, the indexes were down. For instance, Nasdaq, S&P 500, and a lot of the major big players such as Google. Google again was, one of my biggest holdings until recently, and we've made a decent gain on that. And I've been trimming off that as we've been going along and moving it into Adobe. Okay, so the other thing was the hidden bullish divergence here on the stock. So we've saw a couple of swings going upwards, for instance, from here to here, and then again from here to here. Okay, so what I just want to show you something background. So for instance, the price, in order for it to get to that high, going from this 343 to sort of 356, okay, so that's that end here. The relative strength index, okay, the RSI, okay, that's had to reach around a top of 85, 87, I would say, touching 88. However, on the next swing up, okay, this is when again there was a lot of pressure from the markets overall going downwards. So as you can imagine as well, so there was that pressure. However, Adobe had decent earnings, and like I said, the market does like it. However, obviously there's a broader sell-off in the market. I believe if there was, if the Nasdaq was in the green and the other, the broader indexes, this probably would have jumped a lot higher. Okay, however, what I'm trying to show you, for this jump to go from 349 going all the way up to sort of 358, 359, okay, the second swing, we only needed a relative strength index of around 75. Okay, so you can see in the background that the amount of strength needed to push the stock upwards, okay, this time was a lot lower. So that was my other reasoning behind it. And what we call here, what we call this is a hidden bullish divergence. Okay, there's a lot of different things as well. I can put more whistles and bells on the charts, but I want to just try to keep it simple. Okay, I want to try to keep it simple and straightforward. So as we were expecting the stock to go up, I've bought calls. Okay, so just want to go through, with me being in the UK as well, it sometimes can be difficult to buy options as well. So I'll let you know what I use personally, and I'll link it in the description below as well. Okay, so I use a company called Interactive Brokers. Okay, for US people, there's plenty, there's Robinhood and all sorts of names. However, in the UK, we are limited, with where we can buy our options from. We've got plenty of standard stock ISA options. We have eToro, we have Trading 212, etc. However, for the option side of things, we are a little bit limited. So yeah, so just to run over for the guys who don't know what an option is, okay, just literally starting off from the bare basic: call option and put option. Okay, so a call option is where you have the right to buy the stock at a certain price. Okay, so, and that would be, for instance, the strike price where you buy the option. Okay, and also another thing to bear in mind, very important, is a date. Okay, the option, whether it's a call option or put option, is going to have an expiry date. So if your intended price hasn't been reached by that expiry date, your option is going to be worthless. Okay, so the call option, as you believe the stock would go up, you would buy a call option, and that gives you the option to buy the stock. Doesn't mean you're actually buying the stock. So with that option, you're going to be making a lot of gains. Okay, potentially if it does move in your intended direction. Okay, so for instance, Adobe's at 356, I'm expecting it to go to 380, for example. I would buy an option and a certain time scale. Perhaps I'm looking at January. Okay, so I would buy it for Jan, 380 call options, and if it is over 380 by that time, I would be in the money. Okay, so if it isn't, then I would lose out on the premium that I paid to purchase the option. Okay, then the other thing you have is put. Okay, the put options works totally opposite direction. So if you're expecting a stock to go down, okay, the reason perhaps you might want to buy a put option is perhaps if, for instance, I'm holding Adobe and in the shorter time frame, I'm expecting the price to go lower. Okay, although I don't want to sell my stock, okay, I don't want to sell my personal stock that I hold. I want to protect myself, okay, against the downside risks. So I would buy puts, okay, at a certain strike price. For instance, if I'm expecting it to go lower, perhaps at 330, okay. Again, if the price at that time, for instance, by Jan or Feb, okay, is 330 or lower, I would be in the money, okay. So there are different things as well that we can do with the options, because for instance, you can sell puts as well or buy puts, which is a little bit more complex. I don't want to go into that right now, okay. So I just want to stick to the bare basics for now.